You were listening to chartingwealth.com for Tuesday, the 27th of June, 2017. We see that the S&P 500 is up just barely for the day, 0.06%. The Qs, that's the NASDAQ 100, the tech stocks are down about 0.5%. 20-year bonds are up 0.38%. Gold is down almost a full percent. Now, let's jump right in first on the weekly chart to the S&P 500. Still trying to cross over, going down on our price percent oscillator, but the derivative oscillator is still in the positive, and the price was up just barely for the day, 0.06%. Our two-day crossover is down. Our weekly crossover is also down. Weekly vertical crossover, that's the word I was looking for. Let's look at the two-day chart. It crossed over going down all the way back on the 20th of June and has really moved down a little bit, but mostly slidden sideways. Derivative oscillator is continuing to heat up. Still in a confirmed down move, just like the weekly chart is. Let's look at that 4-hour chart. It is trying its best, it appears, to pull back and perhaps cross back over. It hasn't done it yet. We need to see that happen. Those of you who like to use the 2-hour chart, a little more iffy, but again, it's tried to pull back. If indeed you see a big drop in crossover, you like to do the 2-hour instead of the 4-hour, you could look to jump in when it's already retraced, when it crosses back over going down, if indeed it does it. The market just doesn't want to top out. You can see the forces that be continue to try to hold it up, particularly when you look at the really big chart. It just has been holding on since it reached its high, back on the 2nd of June? It is just held on, going on the 4th week now. But my friends, at some point, it's probably going to rotate over going down. And again, we're trend callers. We are trend followers. We are not forecasters. So if indeed it does cross over going down and it's that 4-hour and or that 2-hour chart, when that happens, that's what you follow. So get ready to pull that trigger if and when you see that occur. Who knows? Hell, it could start going back up again. All right, let's keep moving on. We're going to go to the NASDAQ 100. It is in a confirmed down move. It crossed over going down back on the 16th of June, the week ending the 16th. But what has it done? It too has continued to try to hold its power up, but confirmed crossovers going down on the weekly and the 2-day chart. As we look at that 2-day chart, we can see where it crossed over all the way back on the 12th of June, and then it bounded up starting on the 20th and has tried to move up since then. Still, though, we are in the negative territory on both the price percent oscillator and the derivative oscillator. We'll continue to keep an eye on that. Let's look at the 4-hour chart. It is, of course, in pullback territory. When indeed it crosses over going down, would probably be your plan. I would recommend it to pull the trigger for a down move if all things remain constant, if we don't see just a huge run-up that pulls our 2-day or weekly chart over before then. But again, keep an eye on the cues for a crossover going down on the 4-hour chart. All right, back to the weekly. Let's keep pushing through these charts. What do we see going on TLT? That's the 20-year bond fund. Of course, it crossed over all the way back on the 3rd of February, ran sideways and down for a little while, and then started its trend moving up strong starting on the 24th of March. Bounded up until the week ending the 21st, down for the 3 following weeks, and then 2-day vertical crossover going up the week ending the 19th, actually on the 19th itself of May, and has been moving up strongly on that weekly chart ever since then. The last 2 weeks, probably the 2 strongest. That derivative oscillator continues to build energy, and the PPO is also moving up for the day, 0.38%. If we tune into that 2-day chart, we, of course, have a beautiful trend line connecting almost 4 candles pretty cleanly. Derivative oscillators continuing to gain energy, and that PPO is bounding up. If we look at that 4-hour chart, again, keep an eye on that. It is continuing to move up, starting to slide sideways on the PPO, so sort of keep an eye on that. It ended the day down a little bit after moving strongly up in the morning. I mean, it just bled off some of that gain, still an up day 0.38%. Well above the 2-day trend line, well above the weekly trend line. But keep an eye on it. You don't want to lose what you've gained, and you have gained a nice amount, a very, very nice amount. If you just followed our standard rule and jumped in once we had that crossover somewhere at about 125 to 126, of course 128.35. That's not bad for what, about a week and a half period? So again, quite nice. Okay, back to the weekly. Lastly, we shall look at gold, down 0.90% for the day. Weekly vertical crossover going down. Of course, 119.72 is where the market had opened for the week. And again, hesitant calling that weekly vertical crossover going down. Looks stronger with that down 0.90% for the day. Of course, the 2-day chart rotated over going down all the way back on this 16th, Friday the 16th of June. We had some up movement there on the 2-day candle ending on Thursday the 22nd, and we're showing basically sort of a sideways slide on the new 2-day candle. If we look at our 4-hour chart, see what it shows us. Of course, we don't have confirmation for jumping in on a move yet, without a crossover going down on the 4-hour chart. Remember how accurate that 4-hour chart is? I would not defy it. If it crosses over going down after having crossed over going up back on the 23rd in the morning, you may very well consider, because you have the weekly and the 2-day chart going with you. But again, concerned because you've got so much up movement on the derivative oscillator. But again, the PPO is the controlling. And you do have that weekly crossing over going down along with the 2-day. So if you see it happen, please make sure to practice that, okay? So be on the lookout for that also. That is where we are, my friends, as we have closed the day on Monday the 26th and head into Tuesday the 27th. This is the last week in June. Remember, Saturday starts the new month of July. We are moving into those summer doldrums. What's that adage? Sell in May and go away, live to trade another day. Lower and lower volume as we get into the hotter and hotter months. Okay, folks, thanks so much for being with us. You have questions, problems, concerns, let us hear from you. How do you write to us? CW@chartingwealth.com to get all of our materials and information. That is our How to Read a Stock Chart video, the layout that we use at freestockcharts.com, and the directions on how to use them, along with our trade worksheet, our daily market worksheet, and our weekly market worksheet. You need to go to chartingwealth.com and sign up for our daily market review. It's free, and it comes with all those goodies and much, much more. Plus, we'll have our Bitcoin training coming up here in the next week or so. And thank you again for all the great comments about that quarterly chart training that we just did. We may redo that again in the future. We will keep all of our subscribers posted. Chartingwealth.com. God bless. Take care from all the team here.